Macro Desk Update. Gold breaks out as bonds, dollar, and volatility reach decision points. This report focuses on how gold, Nasdaq, the US yields. The dollar and VIX are aligning ahead of a potential regime shift. This is the Macro Structure Desk Update. Gold has already broken into a new long-term range. Nasdaq is still being bid. And now bonds, the dollar, and volatility are sitting on their structural decision points. This video connects all 5 markets into a single macro picture. In December, gold broke into a new macro range between 4,350 and 5,000, marking a transition in the 12-year cycle from 2013 to 2025. In early January, gold pulled back to 4,350, held that level multiple times, and then broke into new highs near 4,630. That tells us capital has already repositioned for a new regime. At the same time, Nasdaq remains extended inside a risk-on structure. This confirms that financial conditions have not tightened yet, even as gold moves higher. That divergence tells us the market is being held together by liquidity rather than growth expectations. The bond market now holds the key. The 10-year yield is sitting on a 2-year central pivot near 4.16. The 30-year yield is compressed into a 7-month structure at 4.84. When both ends of the yield curve sit on their pivots, the entire cost of capital is being repriced. The next move here determines whether liquidity tightens or expands. The dollar index is also sitting on its long-term pivot near 98.86 inside a multi-year two-way structure. If the dollar holds above this level, it rotates toward 99.8 to 102, tightening global liquidity. If it fails, it rotates back toward 98 to 95.8, expanding liquidity. The dollar will confirm whichever way bonds break. Volatility is sitting on its most important support band between 11 and 17, a zone that has held since 2021. Every time VIX has held this band, it has launched into a volatility cycle. This means risk is currently underpriced, even as stocks trade at highs. Gold has already chosen its side. Now, bonds, the dollar, and volatility will decide whether that break becomes a new expansion phase or a consolidation. This is not about prediction. It's about watching how price accepts or rejects structure across asset classes. Structure provides context. Price provides confirmation. These desk updates document a structure-first process, observing how price accepts or rejects predefined levels over time. Coverage spans from futures, commodities, forex, bonds, crypto, stocks, and indices, with structure providing context before direction. This observation is for informational purposes only and does not constitute financial advice.